Traders, how are you? With Marcello. Today we're doing the recap of what happened in the markets last week, all the markets around the world, the economy, so you can take advantage of that great crisis that's coming. This week we have another situation where we have a series of regional banks that collapsed in the stock market. They haven't quite collapsed yet, but it looks like Warren Buffett was right when he said that we are going to have more bank collapses, but your money's going to be secure. Don't worry. Some of you that are a little bit younger may not remember the financial crisis of 2008. That's basically where the entire world financial system all collapsed. Literally, the reports supposedly say it was minutes away from collapse. Many don't know that this situation started in about 1999 when there was a hedge fund that collapsed called Long-Term Capital Management, if I remember correctly. And this bubble just seems to be getting bigger and bigger and bigger because now the banking collapse of 2023 is officially larger than 2008. And Conspiracy Marcello wants to chime in here. Conspiracy Marcello says that this is an engineered collapse for that new communist world government coin that awaits us. Overall, for the week, markets were mostly negative. NASDAQ was the only one in North America that was actually positive. Monday, the last banking collapse of First Republic Bank, that bank was officially taken over by JP Morgan. It kind of seems also that they want just these big banks to own everything, right? Like JP Morgan and Bank of America and Citibank, because then it's a lot easier to be able to institute this new government coin, which is what I very affectionately call kind of the new digital currency that the governments are going to have, the CBDCs. Wednesday, the interest rates were officially raised by the central bank in the United States to 25%. So now the rates are between 5 to 5.25%. This is the highest level in 16 years. And part of what's going on with this banking collapse isn't just the problem where the interest rates that are rising are causing the investments of the banks to actually go down in value, but it's also a situation with greed, in my opinion. Because what happens? Well, if the central bank interest rates are at about 5% now, that means that you should be getting paid in your checking account or your savings account, 3, 4, 5%. But what are the banks doing? They're leaving your interest rate at 0.01, 0.02. Meanwhile, they take that money, turn around and lend it to somebody else for 5, 10, 15%. So what's part of what's happening now is that we have a lot of people that are taking their money out of the banks and putting them in things like, for example, money market funds. So the money's moving around, and obviously a lot of these regional banks that don't have enough capital aren't able to sustain the withdrawal, the continued withdrawal, I would say, of the money that's coming out of their banks. On Friday, we did have exceptional news on the U.S. payrolls report, which was stronger than expected. Not necessarily where the central bank wants to necessarily see, because they keep raising the rates due to the fact that they quote unquote see a strong economy. Not that bank failures are considered a weak economy, but this is putting a lot of pressure on them, because even though we have a situation where we do have all these banks collapsing because of their interest rate rises, we still have decent numbers when it comes to the economy in the U.S. Now, in the world overall, we had pretty weak economic data, and I'll get to that in just a second. The total amount of the bank collapses so far are $532 billion. This is larger, as I mentioned, than all of the bank collapses combined in 2008, which was 25 banks that failed. In overseas market news, the European stock markets were mostly mixed for the week. Russia and Istanbul were the biggest losers there. The Latin American markets were mixed as well. Africa and the Middle East mixed, with Egypt being the biggest loser. And then in the far, far east, Asia and that region, Australia, that whole market was mixed. Not a lot of big movements, mostly under or around 1%. Bitcoin and cryptocurrency news, not a whole lot of news in the space, but I do have an article here about a Texas committee passing a bill to create a 100% reserve gold and silver backed transactional currencies. So over the last few weeks, if you remember, we have more and more news and hoopla about people not using the dollar and the coming dollar collapse. We even have states that are doing it now too. And it seems really interesting to me how I always tell you, for example, to pay attention to what they do, not what they say. I would literally just stop watching the news altogether, just everything on TV. I would just stop watching, but that's just me. But it's really interesting to me how we have central banks going on a gold buying spree, which in my opinion is them kind of stocking up for a bigger seat at the table when we have the reset. And also the states in the United States creating their own safe houses for gold and silver. And now even Texas, not to say that it's going to pass, right? Because it's just a bill. It's not actually a law yet. But I thought that was really, really interesting. Bitcoin is lower this week after we had that huge surge over the last few weeks. It's now in a bit of a range. Went down 0.10% at about 29,300. I take that number on Saturday morning, so it moves quite a bit, so it might be up or down from there. And we had another meme coin, another trash coin that went up over 3,000% called Pepe. There was a trader that actually invested $3,000 and made over $3 million with his investments. In commodities, crude fell now it's on 4 months at its lowest level in 4 months on Tuesday. This is downbeat reports of the overall health of the overall global economy. U.S. crude went down by over 7% to 71.34, while Brent, which is the international crude, had 6 months of losses. They went down over 6% for the week at 75.30. Gold and silver solidly higher as people are reverting to their kind of safe haven assets. If you guys don't know what that means, basically when people get nervous and they think the world is going to end, they go to things that they think are secure, which generationally in history has always been gold and silver or physical assets like real estate and things like that. Gold did hit a record high for the week, $2,085.40. It did pull back to 2019 to end the week there. And for the week, it went up 1.35%, while silver went up 2.46% to 25.77. Finance and banking news. Central Bank in Australia raised rates surprisingly by 25 basis points because the inflation, same tune as before, the inflation is too high. And then in the IRS data, New York and California saw a combined $92 billion in income leave their state from 2020 and 21. That's 3 times higher in 2021 from the figures that they had in 2019. It looks like people have finally had enough of their communism. High earning workers moved to lower tax states during COVID. The restrictions, and obviously, a big profile guy that did it, for example, was Joe Rogan. And since a lot of rules have changed with working from home and things like that, more and more people, especially high earners, are moving to these low-cost states. In Florida, for example, we have a law that says that the budget has to be balanced. Places like California and New York, I don't quote me on that, but I imagine they don't because they just have an endless amount of debt, which is why they keep trying to raise taxes on everybody forever, right? God forbid they ever try to reduce some of those expenses. U.S. national debt, speaking of uncontrollable spending, is at $31.7 trillion. As of this percentage is probably a lot higher. I think I have the article here, but after COVID, right? Let me see if I can just run through this real quick, see if it loads for me. After COVID, over 80% of the dollars in circulation were printed. Yeah, here it is. 80% of the US dollars in existence were printed in literally 2020 and 2021. And it's going to be a lot higher at that point now. The percentage of the debt to GDP ratio, meaning the total amount of debt in the United States compared to the size of the economy, is at about 129% of GDP. During World War II is at 114. And we have this battle now between the Democrats and the Republicans, the left and the right, where we have to raise the debt limit by June 1st, says the Treasury Secretary. Otherwise, the United States is going to run out of money. And there's a situation where the Republicans are saying that they want to decrease spending, they want to balance the budget. Obviously, they only do it when the Democrats are in control, right? Because when a Republican president's in control, let's get all the spending that we need, right? And I always try to do these videos without getting too political because I think most of us are tired of that in the US. But I point this out, that kind of joke, because they're both driving the car off the cliff. It's just one is driving the car slower than the other, right? Let's be honest here. And while the Dems want to continue spending, and obviously not a very good thing in the United States due to the fact that we're already at 129% of GDP. Now, if you didn't know, once a country gets to about 100% of GDP, that's when the problems start arising. Now, the United States is in a special situation because they do have the reserve currency of the world, meaning that everybody essentially needs their dollars, essentially, but that is changing, remember, right? Because now a lot of people are starting to transact in their own currencies instead of the US dollar. But it's a big problem because ever since 2008, 2009, we have a situation where economies and governments around the world have gone accustomed to taking out debt to inject it in the economy, to seeing the economy grow. The unfortunate situation there is that once a country's debt gets to about 90% of its economy, every dollar of debt injected into the economy gets back less than $1 in return of a growth in the economy. So, the United States, for example, right now at 129% of GDP, every dollar in debt that we put in, we're getting 50%, 50 cents, for example, or 60 cents, whatever the number is, back out, which isn't a good thing because it's just diminishing returns. And at the end of the day, it's not sustainable. So we'll see how that's going to work out. Not a lot of news in the political and economic space. In corporate news, Starbucks fell over 9% after they missed their analyst expectations for their earnings and fiscal and revenue for quarter two. The sales did grow by about 14%, over almost $9 billion, better than the forecast, but they didn't meet the earnings and the revenue for quarter two. Shopify rose over 23% on Thursday after they are announcing that they're going to cut over 20% of their workforce. I believe, if I'm not mistaken, they have 12,000 employees. They already cut 10% of their workforce in July, so they're going to be at a 30% reduction. The corporate America continues to do all the layoffs. And Shake Shack, the great hamburger chain, which I think is delicious, their shares went up over 16% after they beat analyst estimates. And Apple rose over 4% after they beat their analyst estimates as well. They reached $50 billion in sales for their flagship iPhone, and they increased their share repurchase plan by $90 billion to make sure all the executives get all those bonuses. In technology, the AI pioneer named Geoffrey Hinton, which is widely known as one of the godfathers of artificial intelligence, said that he recently quit Alphabet to try to warn humanity of the dangers of AI. He says it poses a bigger threat to humanity than climate change. And he quit at Alphabet, which is Google, if you didn't know, because he didn't want it to mar kind of Google's name. And remember, Elon Musk also told us a lot about that as well. An international event, Russia is claiming that Ukraine tried to assassinate Putin with drones on the Kremlin, which is kind of like the White House in Moscow, which is the capital of Russia, although they don't have any proof. They don't have any proof that the U.S. blew up the pipeline either, but... And crowds across the UK and world gathered on Saturday in London for the ceremony of the biggest waste of time and money, of taxpayer money in the UK, which is the ceremony of the crowning of Charles III. That's the news for this week, guys. Let me know if you guys have any questions. Don't forget to subscribe, and remember, the preppers are right.